What's up, man? I still don't know how to send the link out to anyone for the stream itself. Sorry, give me one more second here. I'm just going to send this out real quick. All right. How are you guys doing tonight? Or whatever time it is, wherever you are. It is 3 a.m. where I'm at right now. I'm doing well. I'm doing all right now. Just watching the markets a little bit. I just finished work. I had a pretty long work day and just finished, so I didn't feel like making a video. Thought this might be a little bit more fun to do right now. Not that I'm expecting anyone will actually be on right now to come on and see it. So you guys will have to let me know what you'd like to talk about. Oh, so it's morning in UK, I'm sure. So it's pretty much every time. We have all the times covered right now. So I don't have any particular topics that I was going to cover. Is there anything you guys would like to talk about? Yeah, I think it always is an international crew. Almost everyone, almost everyone in the Discord is from a different place. I think we have one representative from every country. Also, I'm going to try and get better at reading out loud what I'm responding to because I haven't been doing that, so that's something I need to pay attention to. Yeah, I'll probably do it. So, Bitcoin or Bust says, I'm waiting up for a new vid to watch. Well, this is going to be the vid for right now because I probably won't put another video out until, tomorrow afternoon my time. So, I'll probably go to sleep and then wake back up. I don't know. It just didn't seem like much is going on right now. I don't really like reacting to the weekends because a lot of the things that happen on the weekends, let's put it this way, it's much easier to sort of manipulate the market on the weekend. And I think historically you see that. So I try and not get worked up one way or the other based on anything that happens on the weekend. H bar, well, we could take a look at that. We'll look at the market cap. We can look at the price too. We can look at the price first. So, oh, what? I thought I had a DCA index for each bar. I think I made it, but I never released it. My bad. I'll have to release that sometime soon. But so at the end of the day, H bar, for me, I do like H bar a lot. In fact, I own a bit of H bar. Essentially when we saw it go up into this, when it started getting into the 30s, I think I sold most of mine in the 30s here. And then when we started, a lot of the altcoins that I like, so, Solana, Cardano, Matic, Link, and a bunch of others that I'm not thinking of at the moment. I was buying these from May, right at the beginning of this capitulation event. So, we saw a lot of them spike like right around here at the end of May. And then I started acquiring a lot of those once we started getting down into these prices down at the 20, basically in H bar's case went all the way down to 15. But, the longer that we see this bleed that we're going on, I think you're going to continue to see us extend back to these prices. And whereas I was buying altcoins back at this time, I'm not buying as many of them now because I'm not as confident that we're going to quickly recover. Now, back then, I wasn't 100% sure, so it's not like I was FOMOing in, going all in into altcoins. But what I was doing was buying Bitcoin, Ethereum, and then a smaller amount of altcoins. So maybe like 5 to 10%. And then once Bitcoin started to get hot here at the end of July going into August, I started slowly selling the Bitcoin and moving it into some of the altcoins. So, things like H bar. H bar actually peaked a little early here. So, I sold a good portion of H bar there and probably wasn't looking so much at H bar at this time. I was looking more at things like Solana and a couple others. But what we have now is we're forming this, you're seeing this with a lot of things right now. You're just, like I've said a million times, I'm not a huge TA guy, but you are forming a descending wedge. So we're making these lower lows at each point. So here's the, if you think of these as mini peaks, right? So you have a high and then a low, and then you have a high and then a low, and then another high and a low, etc. And so we're just forming these lower lows. And now we're sort of hitting this plateau. And what this pattern actually reminds me of is what Bitcoin did back in 2018, where, we hit this peak and then we just sort of drag down and start forming this this descending wedge for an extended period of time. In fact, if you look here, we've been doing it since September. So if we just look at the number of days at this point, it's quite a while. We've been doing this for about a half a year now, where the returns we're getting after every pump are a little bit worse than they were the prior time. So I think as long as you continue to see the market trade down like we're seeing right now, this is going to continue. And, one other thing that we could quickly look at is this volume profile visible range. We can kind of see where some of the higher volume levels are for H bar. So it's pretty evenly distributed, it looks like, which is somewhat good because, okay, so I'll quickly explain what this is, just in case no one knows here, or whoever's here, if you guys don't know. When this shows you where you have a lot of volume traded, okay, so the more volume you have traded, the farther out this bar will stick. And the reason that volume matters is because when you have a lot of volume, it becomes statistically more likely that you have holders at that level. So for instance, this area back at this, back when we were in this range here, around 27 cents, all the way down to 24, 25 cents. So right in here, there's a lot of volume. Okay, lower than that, but right in there, there's a lot of volume here. And that's significant because you statistically have more holders here. And that's the reason that you'll find this level to be a support or a resistance level. When you have less volume, you're much less likely to hold that level. So as you come down, you see our volume kind of, we're at a high place right now. So if we just bring this down, there's a lot of volume in this area. So that's why H bar has been sort of holding this level right here. But if we start to slide down, lower and lower, there becomes less volume, and it becomes statistically less likely that we'll hold that level as support. So if you look here, once you get into the 16 cents to 18 cents range, if you fall below that level, then you're looking at a quick drop, very likely down to around 14 cents, because you have very little volume in this area. And you can take this metric and look at it and back test it and see how this holds up very well across asset classes. Everything I look at is not crypto specific, but this stuff, a lot of it applies to pretty much any type of asset you want to look at. And the reason we don't have a lot of volume here is because you see right when we got to this price level, we shot right through it. All right. And other than that, you only have this minimal volume being contributed from back in 2019. So a lot of your H bar volume is down at lower levels, but that will be true for everything. Everything's going to have more volume at these lower levels, because when the thing costs 3 cents, it's easy to trade a ton of shares. But once it gets up to, some higher value, like 30 cents, there's statistically going to be much less volume at those levels, because of the fact that, the price is higher and it costs more to trade individual shares. So when you're in these higher levels, you kind of don't, what I'm saying is you don't want to use this metric and compare across vast price ranges. You kind of want to compare at least somewhat similar price ranges, because it will give you a better idea of what's actually going on. Because if you start looking at this, well, then you'll be like, oh, well, we're going down to 4 cents, but that's not necessarily true. So this becomes good for identifying, because we know there's uncertainty in the markets. So we want to know where we have holder bases for the asset that could potentially prop us up. And it gives us an idea of where we might run into sticking points, like we've talked about recently for Bitcoin, as well as where we may head down to if we start moving down. So like this 14 cents range, you start to get a lot of volume there. So that would be a possible target that you'd want to see hold, because if that drops, then you start looking at new levels below it. So on and so forth. You can apply this analysis no matter where you're at, kind of. So Bitcoin or Bust says, are we in an Elliott wave 5? I don't know anything about Elliott waves. I'm not, and I'm not saying it to be dismissive of them. I just know nothing about them. I've never looked into it, even for a second. What do I use for crypto tax? I pay a tax person to do my taxes, and if I owe taxes, then I just have cash on hand and use that to pay my taxes. So that's not a great answer for your question, but that's just what I personally do. I don't do my own taxes because I don't trust myself to do my own taxes. Yeah, we could look at the volume price indicator. And T Hess, sorry, what is this? What is this 5? I don't know what this is. I'm sorry. I don't know if that's, I've never seen that before, so I don't know what the PLN5 is. If you're still here, if you, you could just let me know, because I really don't know. I'm sorry. So I actually have the price volume indicator pulled up, and we could just look at it with respect to Ethereum. We could look at it for Bitcoin also. Actually, we'll just get rid of that. So is this, I'm not sure, is this chat up to date? Was like PLN, or could you share the volume profile indicator, the last thing that was said? Oh, someone sent. Oh, thank you. I appreciate that. Thank you very much. You guys don't have to do that though, but I really do appreciate it. Thank you. So, all right. So we'll talk about the price volume indicator real quick, and then I can address some of these other things that you guys are saying. So, all right, we're looking at Ethereum here, and this is the price volume indicator. And so there's two ways to look at it. If you want to understand intracycle, I think linear is the best way to look at it. Now, if you want to compare multiple cycles, you should use a log scale. So let's do intracycle first. So this particular cycle that we're in right now. And what this shows us is essentially how many dollars are being traded on the asset. Okay. So we're looking at Ethereum right now. And you can see that essentially if we come back here to early June, for instance. Okay. So June, back when we were at around what Ethereum was trading in the 200s. Actually, we need the difference is so vast that we need to go to log just to see. But if you come back to that time, you know, Ethereum was still in this downtrend in terms of price volume. And remember, price volume is dollars being traded on the asset. And so when that's declining like this, that's saying that you're having essentially decreased decreased interest in the asset. So individuals are simply not trading the asset. And when people aren't trading the asset, historically, for any asset, you see the price go down. So we reached this sort of low down here in December. And from that time, trade volume on Ethereum has just gone up massively. It's gone up nearly 9,000%. Okay. But let's come over here and now look at this. So we hit this peak in May, right around the time of our price peak. So we hit two peaks essentially, one right here, and then another several days later here. And these are consistent with the price peak and the capitulation event, because you have to imagine you're going to have high volume at capitulations also, right? So you had this massive trade volume on Ethereum building up to this point here. And that makes sense. But then what we've seen is, the volume has now trailed off 90%. So this just speaks to the fact that anyone who's telling us out there that the price is going up, and these guys on YouTube and Twitter and whatever else that are talking, every single one of these pumps that we have that we're taking off, I don't know what to tell you. They're either ignoring the facts, they're doing it purposely, and they know the facts, or they're just idiots. It's one of those things, because there is nothing whatsoever to indicate to us that we're seeing any sort of turnaround. At least here back in August, we made this sort of this peak right here, and then we made a higher peak here and another one. Okay, so there was at least some indication that we were potentially had room to go up higher from 4K, which we went up to 5K. So it wasn't anything special. But if you compare right here, where is it here? So compare this range here. So the amount of interest in the asset from basically here in January at a price of around $1,300 up to $4,300. Compare this range up to what we saw with this move when we went up to nearly $5,000. High, lower high, lower high, and then just started making a series of lower lows. And this just continues. So essentially what this is saying to us is that your retail interest is just gone. It is just gone. There's people like me, there's people like you guys. And by the way, when I point to the right, that's you guys, because you guys are on my right, on my monitor that's just to my right. And, other than that, all the people, I I don't know what it's like where you guys are from, but here in the U.S., I was in the I was in the airport. I remember back in April, and I could see so many people sitting there on their Robinhood app, trading Bitcoin or whatever, Dogecoin probably at the time. So that is gone. You don't see that anymore, right? And that's indicative of what we're seeing in the prices. If you don't have people bidding, constantly bidding on the asset, you're going to see a natural downward shift in the price. And that will continue until, whatever events need to occur to make the price start to move up again. And that could come in many forms. That could come in major whales buying. I mean, this right here, this wasn't created by the retail market, this turnaround right here. This was created by some big time players stepping in at $1,600 and, buying the asset. But it's very unusual to see this descending wedge like this, and then that just pulls a reversal to the upside, especially in the setting of, declining retail market. And that's why this was completely unsustainable. This made this completely unsustainable. If you don't have people coming into the asset, in fact, we could look at this right here just to, back up that supposition that there was no retail market. Look at the number of active addresses engaging on the Ethereum network at that time. So look where we're at now. We hit another peak here. A lower peak. This is the active addresses. So basically, we're looking from 2019 through current time. This was rising. We hit this peak when our price initially peaked at around 4,100, and then it just dramatically dropped off. In fact, we'll bring it back to 2018 as well. It dramatically dropped off, and it's just been trending down. Okay, and it's continuing to do so. And in fact, we're back in a little downtrend again. So this just gives you the bigger perspective, going all the way back to 2018. But this gives you a more local perspective of where we're at right now. So active addresses, lower high, lower high, lower high, and lower lows all along the way. Now, you could perhaps contend that we're bottoming out, but let's go back and look at 2018. And we bottomed out there for a while too, while the prices just continued sideways for quite a while. So essentially from here, at around $200, we just more or less, there was some up, there was some down, but more or less we just went sideways for another year. So what I'm saying is, based on everything that we know right now, this is very unimpressive to me. In fact, this to me is rather ominous. I could be wrong about that, but I'm certainly not someone who, if I had to make a bet right now for the end of year 2022, if you made me take a stance one side or the other, I'm going to take a stance that unless we see something drastic occur, this is just going to continue. So the risk index is low for Bitcoin, but the regression bands suggest a lot of potential downside. How do you reconcile that? Certainly. Let's take a look at that. It's a good question. So let's get rid of these lines here. So I also think there's a lot of confusion as to exactly what the risk indicator is and what it's saying, and that's perhaps my fault. I have to just find it, and then we can add this on also. Yeah, so you're saying that the DCA index risk model is low, but the regression bands suggest that there's a lot of room to move to the downside still. And that's absolutely true. So let's get rid of a lot of the noise here. Let's get rid of the forecasts, because we don't care about what's going to happen 10 years from now right now. We want to know what's happening right now. Whoops. And then we want this upper. Okay. So, whoops, that's not it either. Sorry, guys. I don't turn these on and off very often, so. That's what we want. So, basically what you can see here is we're looking at, and if you go on to here, we're looking at the realized price low. So this actually isn't the price band logarithmic regression curve. This is the realized price. And this realized price essentially means the average price at which individuals hold Bitcoin. Now, you'll notice that this lower band of this regression curve, we actually typically don't get that low. That's just, it's more of a, this is potentially how low we could go in absolute worst case scenarios. And we typically are just above this level, okay, when we actually hit our bottom. So you can see that, you know, our bottom right here was at, our price was actually at, sorry, where's it at? Our price here was at 209, and this level was at around 180. So we don't typically actually get down there. So when we see this, and you know, this being the lowest end of the band, this is absolute doomsday scenario, and I very likely doubt that we would get there. So, you know, there may be some utility in at least looking at that. Now, this level of the band, we actually do typically come down to here. And currently this level is at 21K. So what we've seen in the past is that in general, we come somewhere between this upper end of this lower portion of the band and the absolute lower portion. All right, so that can be our framework that we discuss this with. Now, let's talk about, for instance, let's look at 2018, because I think it's a good example. And right now we're sitting right at around 20, okay? Now, notice that back in 2018, for instance, when we were at around 6,300, the lower end of the risk band is telling you that, you know, we're low risk. But I think at the end of the day, calling this, you have to recall, we're looking at this on the macro perspective. This indicator is not for day trading. It's not for, you know, how is this going to make me money this month? In terms of, you know, in terms of the bear market side of the risk metric, it does sort of become that when we spike to a parabolic level. Then it becomes the market is vastly overheated, and it's very likely that it's going to crash soon. So in that sense, it is useful for that. But in terms of looking at it from the long-term perspective, this model is telling you essentially where we're at right now. You know, what is the long-term risk of holding the asset? Okay, so when this is saying 20, this is indicating that we're at a very good place to hold the asset likely 2, 3, or 4 years from now, not right at this second. But the bottom line is you don't know where the bottom is. Some things happened back in 2018 that created this move, okay? This was created by actual individuals, big time whales, who capitulated right here because of, you know, FUD. And when I say FUD, I mean their own fear, uncertainty, and doubt about the asset. They are worried that the asset is going to potentially go to zero. So they want to get out on the, you know, potentially billions of dollars or hundreds of millions of dollars that they have right here at $6,000, which they very likely bought at, you know, $250 or something like that, because these were old coins that moved. So they are trying to get out before this price just rockets down. So in that sense, the whales don't know, just like we don't know what's going to happen, because someone sold a ton of coins here at $6,300, a whale. And you can go look at on-chain metrics, and we've done videos on that actually. So when we say that we're at 20, we're talking about down the road. Where is the asset at right now? How strong of an asset is it to buy right now in relation to the long-term holder's perspective? And so in that sense, yes, there's certainly additional downside possibility from here. But if you look back when we were at 20 back here, we got there at multiple points, say here, and then all of these points essentially. And we still went from 6,300 here, 6,500, all the way down to a low of 3,200. So yes, there was absolutely more downside, which was reflected in the metric. However, if you bought at 6,500 in 2018, well, guess what? You literally knocked the socks off of almost every other investment you could have made at that time. And that was simply a reflection of the long-term potential value of Bitcoin. So while in the short term there's additional downside risk, which is loaded in this 20 all the way down to 0 range here, where you're at right now, this then suggests that you're at right now, you wouldn't be complaining about it, is all we're saying, during the next bull market, whenever that may come. The sooner it comes, the likely the less upside potential you get, and that's where the forecasts come in. Okay, so like these, and if we just put in some number, let's say just 1,000 days from now, so about 3 years from now, then that's why you're thinking, well, potentially up to somewhere around 200K. Now as I said in the video about my log regression bands, I tend to think that the upper regression bands are less predictive than the lower bands are. In terms of, I think what you'll typically see is these bands start to turn over as we go into the future. If you just looked at log regression curves from the upper bands through, say, the second cycle, they tend to not be as accurate as these bands here. So in my opinion, this is a very hopeful 230K at some time at around 2025, 2026. I don't think that, personally, I don't know that the price will actually get that high. And that's blasphemy to say that on YouTube or to say that on Twitter, that we're not going to get to $250,000. But then again, it was blasphemy to say that we weren't getting to $250,000 in 2021. So, it's just a way to value the asset. And to answer your question, yes, we do have additional downside from here, and that's reconciled by the fact that there can be contained a lot of potential downside even in this this move from, say, 20, and just go back to 2014. We were at 20 here, 19, 20 right at this range, so at $360, and yet we still went down to $155. So over a 50% drop from there, right? So, imagine a 50% drop right now, it would be chaos. And everyone, just ask yourself, would you leave the asset if we dropped 50% from here, which that would be, sub 20K. So the log bands tell us that we could drop as much as 50K, maybe even as much, realistically, if you want to go all the way down, another 65% from here. I don't think that's possible that we go all the way down to this lower log band, but there's potential that it could happen. And that is, that's accounted for by this area right here. And we've seen that play out in all of the prior market cycles. So that's a long ass way of answering that question. So James Wallace says, what's your strategy at the moment? Are you buying weekly while stacking cash? Yeah, so what I'm doing right now is rather simple. Let me just move these. I'm buying Bitcoin I'm buying Ethereum, and depending on how I'm feeling that week, I may buy a very small amount of altcoins. But typically, I'm just buying Bitcoin and Ethereum. Um, I think there's just, I don't know. I don't know how to sort of reconcile what's going on with this conflict between, obviously Russia and Ukraine. For one, I've heard a lot of people say, oh, major conflicts are good for markets, and there's evidence to support that. But I feel like this is one of those events that has the potential to sort of spiral into something. This isn't a conflict necessarily between. I'm not going to get into the politics of it, so I'm not a expert on any of this. It just seems there are things about this that seem different to me. I'll leave it at that, and more concerning than average to me. It's not the U.S. going into Afghanistan, is what I'm getting at here. It's a completely different ballgame. What's going on right now? Check the monthly. So boss says, could I check the monthly on Bitcoin USD? I think this month's candle and prior months look like. Okay, yeah, we could do that. Yeah, so you're saying that um, this this month's candle and prior months look like November 2019. Yeah, sort of. Yeah, yeah. There's definitely some similarity. Now, the only thing I would say to that, so if we come back to sort of late November, we were at least picking up. You have to think about this. I'm talking longer term time frames here, but our our interest back in Bitcoin was at least picking up. Now, locally, it may have been slowing down. Because obviously there was just a big peak in the middle of 2019. We had this mini bull market, but essentially we had sort of moved to this new plateau, at least from back here. And all I'm seeing right now is this decreasing. So until there's some sort of measurable move up, now it is good to see. I will say it's good to see that we're not down at these levels at least. But typically you don't go right back down to those levels. You start to slowly go up from there because these are sort of a reactionary move. People are capitulating as Bitcoin's selling off, and then we get this slow rise back into it. So it's good to see that we haven't gone back down there, and in that sense, maybe this is the start of this coming back up over time. But kind of for me, until we start to see at least some life, instead of just moving down right here and moving down and continuing to move down, I'm going to remain worried. And as for TA, I think TA becomes of relatively less value as you know as the market becomes more and more bearish. I think TA starts to slowly become less valuable because it becomes more dependent on individual whales and less dependent on populations. So what I mean by that is when you have these type of FOMO moves, the market is very dependent on known emotional behavior. But when you have these type of situations where you're seeing market participation drop off, Well, now we're kind of all sitting around waiting on, well, what's Michael Saylor going to do, and when's he going to start buying, and when are institutions going to get in, and this kind of thing. So when you don't have a hyperactive um, retail market, then the asset becomes a little less predictable because you're relying on just a few individuals. And I assure you, I can almost assure you, I could always be wrong about this, but I can almost assure you that when you have this event occurring right now, all these confluence of events essentially that are occurring right now, it becomes significantly less likely that if you are a high net worth individual, you're going to say, hey, you know what I want to do right now? I want to go buy a bunch of the most volatile asset that I can possibly think of. It, I mean, you just don't do that into these wildly unpredictable times that we're entering into. Now, certain things can play out. The market could start to show a little more clarity. The stock market could, you know, make a turnaround from here. This conflict that we're experiencing could start to seem like a resolution is in sight, or at least there's a better understanding of what could happen. We're waiting on the Fed, but it's just not a time where historically you see high net worth investors, which are the ones we are relying on right now, simply based on this fact. It's not a time you see them step in and start picking up the most high volatility asset that's out there. So I'm just, it's tough for me to imagine, any sort of sustainable price move to the upside from here, which is kind of what you would have seen, back in November. So like right here, as you were saying, and then moving even from there, though, we still had 6 months or so, 4 or 5 months of sideways action, including a massive capitulation event. So, I'm not going to be your best technical analyst. It's just not how I trade the market. I think in general, long-term investing will, by orders of magnitude, outperform short-term traders. And, you may be convinced to the contrary based on the stories that individuals will regale you with on YouTube and Twitter, because everyone's a multimillionaire on YouTube and Twitter. All the short-term traders using their, looking at their whatever those things are called, the fibs, the Fibonacci levels. They're all out here trading millions of dollars a day, and at least that's what they're letting you believe on YouTube, and they're all making it big. But I suspect that 99% of those guys are out here using demo accounts and trading fake money, and or they're just losing money and just leading people to believe that they're successful. Whereas if you just dollar cost average, nothing needs to be proved to you. Dollar cost average. And then just do the simple math. It's enormous how much money you make. Even in the stock market, if you're just dollar cost averaging, you're killing it. But a lot of people, they want to be short-term traders. They want to, and think about it this way. There's always something to talk about when you're a short-term trader. You always have content. There's only so many ways that I can come on here and tell you that the market looks bearish to me right now. But if I'm a short-term trader, I could be like, oh, let's short sell this, and let's go long on this, and etc. So it's almost a self-promotion tool, or it's a self-fulfilling promotion tool, because as you're making any type of movement, you have something to talk about, and it's exciting. What's boring is dollar cost averaging as the market's moving down. What's exciting? Dollar cost averaging out of the market as the market's moving up right here. Okay, so that's how I have been approaching it for years now, and I would be willing to bet you a significant amount of money that not many short-term traders have outperformed the type of gains that someone like me, who's been dollar cost averaging over the last, however many years now, whatever this is, a half a decade or so. And it's not to brag, it's to, I see so many short-term traders, so many people on these social media sites just getting wrecked repeatedly because, there may be a few extraordinarily high quality individuals out there that are in the short-term trading space. But I assure you, 99% of these people on YouTube and Twitter are absolute buffoons, and they're doing you're doing nothing but helping them live their lifestyle. And when I say you, I'm obviously talking to the general population, not you guys. Yeah, so the last time Bitcoin touched, okay, let me just make sure I'm all caught up here. Sorry, I'm probably taking too long on my answers. I'll try and shorten them up, be more concise. If you've ever watched my live streams with, or not live streams, but co-streams with Upside Down Data, I've realized that I talk way too long. So I'll try and keep it more concise. So what are my meetings, or what are my thoughts? Crypto Villain says, what are your thoughts on the Fed meeting in a week? I'm not so sure about this. I think we're seeing a lot of cracks starting to form in the economy. Sorry to interrupt myself. I will get back to that other question that someone asked about the Black Swan event also. I'm sorry to sort of switch the order up here. But as for the meeting, I kind of think we're seeing a few cracks showing up in the economy, and that makes me suspicious that you're going to see them sort of kick the can down the road, as it were. Because, if they go ratcheting up the rates, now granted, they're talking about very small percentages, and I potentially think a lot of it is cooked into the markets already, but I still think it has a psychological effect, because now you're getting to a place where a lot of people are talking about, oh well, they may back off now and not hike the rates. Hike the rates. So if you see them, I have a feeling that my gut tells me they're not going to, because of what's going on, and I think they're going to sort of use. I think that they're sort of going to use the conflict in Ukraine and Russia as a potential reason not to. But with that said, I don't know. You have Goldman Sachs, all these big time. All these big time players like that who do these predictions, and they're always wrong. So I think, it's their job. These are some of the, everyone likes to, talk trash about them like they're idiots. But at the end of the day, these are some of the smartest people in the world, and they get it wrong all the time. So, my prediction or anyone else's prediction is quite frankly, it's just a guess. So, I'm suspicious that they're not going to. I'm also suspicious that my answer is worthless with regards to that. And, as I believe your Twitter handle says, something to the effect of essentially, look to make friends with individuals that seek out the truth and flee from those that believe that they found it. And I think that's telling. These people that talk about the markets and talk about these things as if, they're sitting there giving you the gold standard truth. I think it shows a lack of humility, and anyone who lacks humility always will believe that they're right, and they can even be convincing about it, and that's very dangerous. Remember, it's your money. You guys are the ones going to work every day, busting your ass to, put it into these markets, and just consider the person who you're listening to that's sitting there talking convincingly that they know exactly what's going to happen, when in reality it's very, very likely that they don't. And you don't want to just throw your good money after bad, as the saying goes. So I do want to answer that question about the Black Swan event. Now I have to find it again, though. Um, okay, so Flavius, and I'll come back to the other questions as well. The lower band is quite similar to the 300-week moving average, right? Yeah, it is pretty similar. That's the bottom usually in Black Swan events. Is that Was that the question? The lower band is quite. That's the bottom. Okay, so the lower band is quite similar to the 300-week moving average, and we could put that up. That's the bottom usually in Black Swan events, which, while organic bottoms are usually 200-week moving average. More or less. I mean, let's. So I believe that this is the. Oh, we're on the monthly chart. Let's switch this over to the weekly. Let's get rid of this real quick. Yeah, so that's the 200. So, you have to remember, let's go to the daily for a second here, and I'll have to readjust this. What, 1400? So you have to remember that when we call this the quote unquote bottom, this was 4 or 5 days here. So it's not like this was any sort of statistically significant level. Now, 4 or 5 days can feel like a lifetime, though, especially when you just lost, that kind of money. So where did I just do that? So, I mean, when we're talking about it goes down to the 300, remember, this was a wick. It was a single day's wick. Um, so, and people talk about it getting down to the 300. Well, it actually didn't, at least on, one of the biggest exchanges. It did not get down to the 300. So if you had a limit order in at 300, first of all, you weren't getting that limit order filled, because guess what? Your limit order very likely was not big enough to get it filled. It was probably going to be filled by some much, much bigger player. And you have to remember, the bottoms occur because of the fact that someone with a lot of money steps in and buys up all of that sell side volume. Okay, so it's very likely that these types of events, and if we just go back here, so these events in here, like these bottoms occur because someone with a lot of money comes in and swoops up all of the volume. So it's going to them. This volume is going to them. So it becomes exceedingly difficult to actually buy one of these bottoms. This is someone with, and we're talking typically, not always, but typically big time money. So it's, it's very unlikely that this was just like, a bunch of retail orders were in at 30, what was the actual bottom at the close or the low of 38.50. There probably weren't a bunch of retail orders in at 38.50. Someone swooped in and did a massive buy here and ate up all of this sell side volume. So all of that capitulation volume. I don't even remember the question now. I'm terrible at that. Yeah, so it kind of wasn't even a question. It was more of just a statement. And yeah, that's historically what we've seen. And you know, if we could have a 300 week moving average, you obviously can't here because there hadn't been 300 weeks yet. But you could envision, just based on how this has historically been, you could envision this being somewhere like right there, right, and then this being somewhere like right there. It's you know, that's obviously a BS analysis I just gave you, but it's not the you know, just if you could imagine this line extending over this way, it sort of would make sense. So yeah, I mean, it wouldn't be the most ridiculous thing in the world to say that 200 week is the potential for your low side, and then 300 week would be like, you know, a more serious type capitulation. So let's see what else we have here. Oh yeah, I mean, boss. Um, I'm not. I could. I'm way too American to even attempt your last name, boss, and I apologize for that. I blame my parents. I blame my ancestors. But at the end of the day, you say, I completely agree to add on to this. If viewing the weekly BTC chart on index, you can see the volume has yet to increase, yeah. And the whales have to load up. We saw this every prior bottom in every cycle. Yeah, exactly. And that's what I'll be watching for, is the volume to start to pick up. Or, you know, at minimum, I watch a lot of the on-chain metrics. And that's one of the ways that I'll personally be looking for whales to start getting into the action. You know, there's a lot of different on-chain metrics that I watch, but you know, there's a couple of them that I'm more interested in looking at, so I'll be watching those. And you know, obviously, if I saw something that was indicating to me that this market is getting primed for a turnaround, I would obviously be on here talking about it. Trust me, you have no idea how difficult it is to be spending the hundreds of hours of my life I'm spending making YouTube videos that no one wants to hear about. It sucks. But I feel like, you know, I had not an obligation. I'm obviously not obligated to do anything, but I feel that there's so much disinformation out there that, you know, at this point, I know that, you know, a lot of people have, you know, I feel like I have a great community. You guys have been absolutely amazing. But it sucks to come on and say every day, yeah, the market looks terrible to me right now. So I would love to come on and be able to be, you know, a proverbial moon boy for for a couple months. But at the moment, you know, well, in fact, when I first started my channel, it was fun because I sort of started my channel a couple days before the Golden Cross, and I made my very first video was a Golden Cross video, and that video got more views than any other video I ever made for like the next month. My very first video got more views than any other video because it was about something that not many people were yet talking about, because, you know, I don't know, YouTubers often don't even know what's happening until it smacks them in the face, and no one was talking about the Golden Cross. I started talking about it like a week or two in advance, and and when I say a lot more views than any other video I made, I mean it got 300 views. So let's put that in perspective for myself. So it didn't get a lot of views, but my next like 20 videos each got like 7 views, and 6 of them were me and my grandma. Let's see. Oh yeah, and then you continue on. What do I think? Yeah, I think I personally think that the whales are. I think they're waiting for world events right now. They don't really give a crap about Bitcoin at the moment. I think it's sort of far and removed from, because you have to remember, if you're a whale, a quote unquote whale, you have a broad range of assets. You don't just have Bitcoin. You have, you know, you have equities, you have commodities, you have, you're invested in all sorts of different things. Not many people are just going all in Bitcoin. Even I'm sure even Michael Saylor, who likes to talk about Bitcoin being the only viable asset for individuals to invest in, I guarantee you, he has a diversified portfolio. So, these people stand a lot more to lose than just whatever happens with Bitcoin. So, I feel like that's definitely, um, I think people are waiting for some clarity before they start to do anything. So sample rate says he's got to go, and he says that if I run out of questions, just say something about Ben. Yeah, I'll save the Ben comments for a in case of an emergency. Yeah, the markets. So I think there are a few people defending this price, but more are waiting for lower prices. Yeah, and the market's moving very slow at the moment, and a lot of people are waiting to see where Sunday closes before making a move. So I'm not. I don't. To be honest, personally, I don't really care what happens on Sunday. I'm interested to see what the stock market starts doing this week and just continues to do. Ultimately, I don't really care what happens at all on these daily time frames. It is interesting to look at and talk about, but um, you know, let me know what's up out here in June of 2023. Then I'll be interested to know what's going on because I don't think anything. So if it continues down, that's just just continued dollar cost averaging. The sooner it starts to go up, you have to remember, just think about it in terms of this. Let's say our market cycle peak was in 2020. Well, your maximum that you could be hoping for back then, as predicted by the log growth curve, was 43K. And, right now, at this moment in time, let's just see where we're at. We're talking, you can barely see the number, but it says 94K. But once you start getting, years down the road, then we're talking about much higher numbers. Okay. And it's not 94K, sorry. Or that number's broken. I don't know which. Oh yeah, I'm sorry. That's because we're forecasting then. So this number takes over. So 94K right here, and then out here, 160, then that's when you start getting up to 200K, etc. So to me, wanting the price to go up from here is sort of it's the opposite of what I'd like. I would prefer the price sort of, and I don't mean to offend anyone when I say this. I would personally prefer the price to move down. But that's my my selfish desire. I understand that a lot of people have a vested interest in the asset, so I'm not like rooting for it to go down. But I think if you actually have a plan in place where you're dollar cost averaging as we move down, that's what's going to have a higher potential of yielding you greater returns. Because if we just went up right now, then quite frankly, I think you are quite literally capped by whatever this says. You might get a bit above it, but barely. And I think this level is even, as we go farther and farther, it becomes less likely that this is possible. So, you know, going down, and if I could be buying Bitcoin at 15K or whatever, if I could be buying Bitcoin at 12K, that would be wonderful in my mind, although it would be horrifically scary. Trust me, that would be scary for me as well, because you always have the specter of it's never going to come back. That's always a possibility. Just because people tell you Bitcoin is the future and, um, whatever else is the future, it doesn't mean that it's true. So that's why it's called, risk, because we don't know. We can believe, we can suspect, we can have conviction, we can, um, have every other type of positive word you want to apply to the market or your sentiment about the market, but that doesn't mean that it's true. Now, that's not me sitting here saying that that's what I think is going to happen, that we're going to come down and never come back up, but it's at least a possibility. You always have to consider that. So if we got down here, I would certainly be buying a lot more. In fact, probably an irresponsible amount is how much I would buy if we got down into this level. And it would be scary, but ultimately, I think getting down here and having conviction, it would be something that's going to, quite frankly, make you extraordinarily wealthy come the next market cycle. Yeah, the Fed. You said that you believe they could sort of cripple the economy. I'm guessing you're saying if they got too aggressive, and I completely agree with that. I think we're sort of in a tenuous position right now, so I think they're certainly going to take it slow as far as that goes. If they do raise, it's not going to be much. Yeah, yeah, you're right about that. That so I think they will raise rates. They need a very strong reason not to. The whole rate raise was sprung up because of inflation, and now because of what's going on in Russia, they have even more of there's going to be even more inflation because as a result of that, and I completely agree. So yeah, I think that's certainly worth. I think you certainly raised some valid points there. That there's or that there's at least incentive to raise rates. It just becomes a question of how much they're going to push the rates, and sort of what the consequences of that will be. Okay. I wasn't aware of that about Arthur Hayes. So it was Arthur Hayes, the CEO of BitMEX, that bought the COVID low, so right at around 3,500. Okay. I was not aware of that. Yeah, and trust me, Arthur Hayes. Trust me, if you have a limit order in at 38.50, and it comes down to whether you or the the CEO of the exchange is getting it at that price, you know, you can place your bet on who's going to get it. Oh, Geo retracted a he retracted a message. Geo usually has good comments. Yeah, Bitcoin has a way of giving second chances. I completely agree. Sometimes third chances. So, blue collar mindset says you think it's accumulation this year and next, and the ramp up begins Q3, Q4, 2023. Yeah. So, um, you know, then you say in anticipation for Bitcoin's next halving. I, I think the halvings, um, statistically speaking, have less of an influence going forward, for the reason that, okay, in fact, let's do this. Um, I think we put it on index. I might have to go over to, I think this is on here, but I don't know where to find it on TradingView. So, oh yeah, we don't want to type in Bitcoin. God, then I have to um, scroll through the 8 billion Glassnode indicators that all have the word supply in it. Circulating supply. That's probably what I needed to type in. So let's look at the halvings here, and I'll show you why I suspect the miners have less of an impact, and um, going into the next cycle are going to have very, very little impact. So you imagine, let's say here in 2013. So your supply is around 10 million. So we know that means there's 21 million coins total. So you still have the potential of another 11 million coins. So these guys, these miners earn over this time, actually, if we just start with the first cycle, that's why this time right here, right through about here, is commonly referred to as the miner era, okay? And then this time period right here is commonly referred to as the exchange era, and this time is referred to as the institution era. And those simply broadly refer to who has the control over the market. So back at this time, it's the miners. And that's because the miners, okay, so from 2010 to around 2013, the miners get around 8 million coins. So all of your daily sell pressure, where's it coming from? It's coming from Bitcoin miners. All right. Then from 2013 through, let's just say 2013 here, up until the market bottoms out around here in 2015. So your miners from that time go from, they mine another around 4 million Bitcoin. Okay, so another 33% of the supply in just about 2.5 years. So again, almost all of your pressure, all of your sell pressure, plus remember, they have all these coins that they did not sell from back here. So all of your sell pressure, you have massive sell pressure coming from your miners during this time. Then this is referred to as the exchange era because the power then shifts. So from 2016, they go from having 15 million coins all the way through this next cycle. They only get about 2 million coins. So now the power or the amount of coins that they actually obtain during this time, it's a mere 2 million coins. That's something like approximately 1/8 of the total, just under 1/8. So just over 1/8, between 1/7 and 1/8. That's over, it's about 1/7 to 1/8 of the total market. And that's all they get during this time. So they do have a lot of influence still, but it's waning. So now the exchanges are the ones who are getting all of the coins, and they are then moving those onto the market. They are creating the sell pressure. Okay. Now we're at a place where from this time, 17 million coins, if you go from the market bottom over here to where we're at right now at around 19 million coins, they've got 1.5 million coins in the last, 3 years or so, 3 or 4 years. So their relative importance is becoming negligible. It's the institutions now in the exchanges, and increasingly less so the exchanges, because if we look at, we can actually see how many, coins are being held on exchanges now. So you'll see that, look at the exchanges percent. How much of the supply was held on exchanges? And it went massively up during this time. So from right here in 2017 through right here in 2020, the exchange, the amount of Bitcoin that they owned was massive. And that has been dwindling. And so now it's in the hands of whales. It's in the hands of basically institutional type investors. It's in the hands of people like you and I. We are the ones with the Bitcoin. So no longer do the miners really have an effect whatsoever, because the percentage of the supply that they get per year is minuscule. So the reason that miners matter is because they were creating sell pressure. And that's something that Plan B completely ignored. I'm sure he knew it. And again, he's not an idiot. He's a smart guy. So I'm sure he realized that fact, but he never talked about it. And so it was a glaring flaw in his argument. And you had a lot of people, there were academics out here writing papers about it, but no one cares about that because it's not exciting. It's not talking about it's the same crap I was talking about before. It's not you getting to talk on YouTube about a $1 million Bitcoin, whatever, in whatever lunatic time frame that he said. So, things like that are why you need to go deeper in your analysis rather than just saying something, some basic level like, oh, you know, because of the supply of Bitcoin, we're going to see the price do this, when he's ignoring a basic fact of the market. So that's kind of why I don't think the halvings are going to be as important going forward, and they're going to become increasingly less so. So the next halving may have some impact. In fact, there may even be a type of you know, I don't want to say nostalgia, but people may react to it in anticipation. But then, two halvings from now, it's going to be nothing because almost all of the Bitcoin will already be out there, right? You'll be talking about like a half or a quarter of % of the Bitcoin being mined over the next halving. So it just is going to increasingly become less important every single market cycle. And now we're in the institutional era because look at the market right now. We can't we're deadlocked in this zone because, well, the institutions need to come, or the whales and institutions need to come and liquidate the guys using leverage every day because, well, there's all this money sitting here. You have all of these shorts right here. Why don't we get that free money from them? So we'll drive the price up to here. Oh, now we have all these longs. Let's liquidate them, get their money, and rinse and repeat all through each of these cycles. Just get a little bit up, get the people on leverage, liquidate them, get them back down, and then we can just keep doing that. It's a piggy bank for us, the leverage users. Hey, thanks, Blue Collar Mindset. I appreciate that, man. Thank you very much. So Flavius asks, in the last video, I showed basically you want to see the VP VR? Sure. So VPVR is not the same thing as, I was showing two metrics simultaneously there. And the one I cannot show you right now because that's actually a very time intensive video for me to make because I have to synthesize that data on my own. And I mean, I could do it, but I don't have it up at the moment. And it wouldn't be updated for today. Not that I think it would have wildly changed from yesterday, but it involves a few processes that I just can't really quickly recreate right now in terms of being on a live stream. So, but I could just quickly summarize what we talked about and compare that to right here. So this is the VP, volume profile visible range. And just to quickly reiterate in case someone just came on, this shows you where a large amount of trade volume has occurred. Okay, so when you see this stick out, there's a lot of volume there, and that typically indicates that it will be harder for the price to move up or down between these levels because you have a higher, statistically speaking, a higher number of holders at these levels. In addition to that, yesterday what we looked at was a metric which shows at each particular price level how many actual coins are held at that level. So combining these two metrics is very useful because it can show you, so we know there's a lot of volume in here. So what does that do for us? It does two things. It shows us, statistically speaking, where there are people holding the asset. If you have a lot of volume, in general, there will be leftover people holding the asset in these levels, okay? Because not everyone's going to try and swing trade or whatever other type of thing. So that's the first thing the VPVR does, or the volume profile visible range. The second thing it does, it shows you where in the past buyers have been willing to step in and buy the asset. So we know that all through this range, you've had a lot of buyers. Now, it can also act to show you, well, what if we drop down? Well, we know that, down all the way down to this 31K level, buyers have been willing to step in and heavily acquire the asset. Okay, so going all the way down to about right there. Going down to that level, buyers have been willing to step in. Now, obviously, buyers of last resort have been willing to step in right here, but even the retail market has been willing to step in all the way down to this lower level here. So even if it can't tell us specifically where people own the asset, it can tell us where they may be willing to buy. And you can extend this down further, and we can just, like I said, you can't compare wildly different price levels because the price is different for the VPVR. So more shares will be traded down at these lower levels just by natural extension. It does not mean that more coins are being held down here. But when you're looking at a range, anywhere between 30 up to 40K, or then even up to 45K, the price isn't so wildly different here as to make that big of a difference. But once you start looking at, like let's just, for instance, you can't even see the volume profile visible range up here, right? Because all the trading was done down here. But that does not mean that all the coins are held down here. That's not what that means. So it doesn't work like that. You have to be comparing at least somewhat reasonably similar price levels for this metric. So, what this metric tells us, though, is we don't have any volume. Not much trading at all has been done from this level right here. So this 31K all the way down to around 20K. And a lot of that is as a result of the fact that if you look back here, we annihilated this level, this 20K up to around 31K. I mean, look how long this level took us. It took us from, and we'll just do days. This level took us 17 days to go up 10K. So, I mean, that was, and perhaps more importantly, even if you want to think about it like this, 17 days to go up 60%. So that was a absolutely massive move, and it did it in rapid order. So as a result of that, there just aren't a lot of holders in these levels. And now that brings me to my other metric that, I can't show it, but, just quickly like this, but it looks just like it actually looks more like, if we just say did that, it looks like this. And what this metric is showing us is the actual number of coins being held at each level. So while this gives us an idea about what may potentially happen going forward, the other metric is telling us, as I showed in the video yesterday, there are a huge number of holders at 38, 39,000. Okay, so you have a huge number of holders at 38, 39,000. Then there's a little bit of a lull, or you do have some in the 40s. Then there's a lot in the higher 40s, and then you have a lot basically at different levels in the 50s. So these are natural support and resistance levels. Right now at this 38 to 39K level, if we just get rid of this, so right now where we see that a ton of people hold Bitcoin. In fact, we showed that anywhere between around 35 up to around 41K. So we're like right in this range. I mean, you have something like 15% of the entire Bitcoin supply. So every coin in existence is held right between this level right now. So if this level cannot act as a level of support, watch out, is all I'm going to say. Because that means you had 15% of all of the Bitcoin that exists was sort of cycled through, or these people were not, stepping in to act as support. And just remember, that's a massive quantity of the supply to be held within. If you think about it in terms of just percentages, we're talking about 4 or 5K. So 10% of the total price range is holding over, it's holding over 15% of the supply. So that's a relatively large amount of the asset is held right in this level. And I think that sort of bears out on the charts. You can see that anytime we've been in this level, this has been somewhat of a sticking point. All right, so we've kind of got stuck in these levels here, here, even not really here. We sort of moved through it there, but if we just go down to sort of the level I'm referencing, actually I set up to around 41K. So these levels right here have just been places where we've kind of got stuck and had a bit of a time getting through them. And even once we do get back through, you have so many holders in this level that the price sort of just gets naturally sucked back in because of the fact that, well, they all own. You have all these people that own right here, and naturally, anytime you have a lot of people holding in these at a particular level, you're going to have a lot of short-term holders in that level as well. And short-term holders like to take small profits. So, you hold at 39K, sure, sell some at 45K. You just made a nice, we'll just take a move. You just made a nice 16% in a couple of days. And if you're a short-term holder, then maybe you take a short position and you're looking at, okay, now I just made, another 16% in a couple of days. So that's kind of what we're seeing is we just have a ton of coins right in here, but you don't want to go below here, and you certainly don't want to go below 30K, because then you're in the land of the unknown. You're coming down, you're talking about your next level of volume not existing from basically 30K all the way down to around right here. Okay, so right over in this range, you don't have a lot of volume anywhere until you get down to around, realistically, it's at around 18K. So I don't think, even if we did get down to those levels, I have a hard time believing we would stay down there for very long. But there's always, you don't want to be the guy who capitulates, though. Remember, it's easy to sit here in our chairs from the comfort of our home sitting at 39K when everything, it looks bad, but it doesn't look terrible. It's a lot harder to maintain your conviction when you're seeing the price. Okay, just imagine this. You're sitting here at 6K. You're like, okay, well, I bought some Bitcoin at 5K. I bought some at 4K. I also bought some at 12K, so that one sucks. But overall, it's not the end of the world. And, everyone's telling me the price is going to go to the moon right here. And then you go from 6,500 all the way down to 3,100. MSNBC is running stories about Bitcoin's going to zero, and they're interviewing people asking if Bitcoin's going to zero. They're bringing old white guys in, old bald white guys in, who are telling you that Bitcoin's a terrible investment and gold is what you should be in. It's probably going to zero. And that's what you're getting. Think how much harder it is at that point to not capitulate. And that's what you have to imagine. Going down to this level is going to be exactly like something like that. You're going to hear it on every news story. You're going to hear people, telling you it's going to zero. Seemingly reputable people. But at the end of the day, these people have no idea what they're talking about because they don't invest in the asset, and they don't, they are not dissimilar to the YouTube Moon Boys. They're going on MSNBC to talk trash about Bitcoin because they have a an incentive to do so, just like we do, to talk about it in the positive light. So the spike in the 1000 BTC addresses chart, that's not real. That's as a result of the whatever, the Bitfinex hack. So the 1000 BTC is the government taking custody of those Bitcoin. The addresses charts right now are kind of there's a bit of an anomalous data going on with those right now, just based on that Bitfinex hack and then the government acquiring all of those Bitcoin. So I wouldn't put a whole lot of stock in those at the moment. So let's see. Greetings from Argentina. Do you think price could go lower with the amount of people putting their orders just below 29-30K? Seems so unreal to me. Yeah, and Lucas, that's a great point, and I think that's also something worth considering. So let's put it this way: I feel like um, I feel like if the price were to go that low, it's again going to be one of these. It's going to be sort of like a manipulated event where, and I hate the word manipulation because everything's manipulated. If the price goes up, it's manipulated. If the price goes sideways, it's manipulated, etc. But we're talking about manipulation where the price is moving in a particular way with a particular purpose, or the individual or individuals moving the price have a set directive in mind. And so I think for someone to drive the price below this level that you're referencing, right here, I think it would have to be a sort of a massive liquidation cascade, and I think you could see a lot of people getting on leverage down at 30K, saying, okay, well, I know you have all these buyers at 30K, so they're going to step in. So I don't know. There's a lot of different ways that it could happen, but I assure you, there are individuals, investing in Bitcoin that have the power to move the price like that, sort of below this level. And like I've said all along, I don't think if we did go below 30K, I think it would be something like this, where it's sort of an explosion move and then a small capitulation event, and then essentially you're starting your uptrend, or something even like the COVID capitulation event. Because remember, all you need is to start a capitulation cascade, or sorry, a liquidation cascade, and then that turns into, you probably do it at around some time where there's, some news event that's going on. So it's backed up by something. So now there's fear in the market, and then people are capitulating. People that bought up at 60K are going, oh crap, because there's a lot of coins being held up here as well. There's over 2 million coins. I think 2.4 million coins are held just above like this 55K level. So you get these short-term holders capitulating, you get the retail market capitulating, and that's how you can wind up with much lower prices if it's only for a short amount of time. And then you even have people, once you're able to do that, questioning whether they should be buying into the market at this point, because like I said, you have all these seemingly reputable people, parading through MSNBC, which is the American financial news network, if you're unaware, or it's one of the or sorry, CNBC. I said MSNBC, but you get them coming through, giving interviews about why Bitcoin's trash, and it's just sort of we've seen it happen lots of times before. Now, like you said though, there are a ton of orders down here at 30K, so you're right. There is a chance that sort of that would be the absolute bottom of the floor. Although I will just, for the reasons I've just listed, I will remain suspicious that we don't go below that. But I would not be surprised for a second if we sort of, were able to hold that 30K level. And just as an aside, that's why I dollar cost average, because like I say, I don't know where the price is going to go, but I'm, and because I don't know, and because I'm willing to admit that I don't know, and I'm certainly in the short term, I don't know, by dollar cost averaging, I'm mitigating my personal volatility, because I'm buying a very small percentage of my, net worth that I'm willing to invest into Bitcoin. I'm investing just a very small percentage every month. And if it continues to go down, well, I'm not going to be wrecked because of the fact that it went down. In fact, I'll be in a fine position, just willing to wait it out several more years until it turns around, like we've seen over and over again. Yeah, I'm sorry. You are right. It's about the wrapped Bitcoin. You're absolutely right. But there was some other change on the. I knew that's why I said there's an anomalous event. I couldn't remember exactly what it was, but over the last month, you've basically had two events that have sort of skewed. Um, they've skewed the addresses. So looking at those right now is sort of it's sort of off at the moment. Am I much so? Politics aside, are you more or less bullish for Bitcoin long term because of all recent geopolitical events? I'm more bullish actually than before because of this fact. Have you seen Ukraine requesting that people send them bars of gold to help them with this effort? And the answer to that is obviously no. Nor have you seen them saying, "Can you send us USD?" or any other currency for that matter. They're requesting crypto, and that's for the fact that this, that just shows we're witnessing a live, use case for the asset on the or in the setting of a legitimate sized nation. We're not even talking about the size of El Salvador at this point. We're talking about a much larger nation who's finding a major use for Bitcoin. There's been talk of Russia even using it, although I think a lot of that is, quite frankly, overblown in the way that people are suggesting that they're going to use it, because I don't think it's possible for them to use it the way that you're hearing a lot of people suggest that they're going to evade sanctions, for instance. I don't think they A, have enough crypto, or B, it's exchanges will know where the wallets that Russia's holding the crypto and just simply likely not exchange with them, or not trade with them. That's neither here nor there, though. But you're seeing a real world use case for crypto right now on a global scale. You're seeing it. So I think this just is just showing another way that that crypto can be used as a humanitarian tool at its most basic level, because not to become political, but I've regardless of where your stance on the issue is, there are people in Ukraine that they are, quite frankly, innocent. You're not guilty just because you're a citizen of the place. And like I said, not to get political, but it's a humanitarian crisis regardless. And those people need help. So I've personally donated just to various groups that are accepting. Obviously, you want to vet whoever you're going to send money to and make sure it's a legitimate organization, but and make sure the money is going to be going to where it's suggested that it will be going. But crypto is just a way that you can do that, and we're seeing that play out on the world stage right now. So that makes me more bullish, is what I'm getting at. Oh well, the new fiat has been missiles, guns, and ammo for decades now. I mean, look at the effect that war has on the economy. Well, that seems to be about the end of the questions, and it is 4:30 a.m. and I'm tired. So rather that someone suggested that I should save a comment or save a comment about Ben for when I ran out of questions, but we won't do the Ben comment tonight. We'll save that for next time. Something to look forward to. So that's probably going to be it for this one, guys. Thank you guys for coming on. I hope you found some of the information useful. So I'm probably going to head out. Oh, Codex, you just missed it, bro. Sorry, man. Very sorry. Let's see here. 21 people watching, 20 people watching. That's way more than I thought. I thought there would be like 3 on right now. Yep, definitely, guys. Thank you very much. I appreciate it. All you guys. Codex missed it. Late to the party. I was sleeping. Well, yeah, you can go back and watch the VOD. All right, guys. See you.